அனைவருக்கும் வணக்கம். Let me start with திருக்குறள். அதிகாரம் பொருள் செயல் வகை, way of accumulating wealth. ஒன் பொருள் காழ்ப்ப இயற்றியார்க்கு எண் பொருள் ஏனை இரண்டும் ஒருங்கு. Shining wealth well gathered attracts the other two, virtue and happiness. நல்ல வழியில் மிகுதியாக பணம் சேர்த்தவர்க்கு மற்ற அறமும் இன்பமும் எளிதாக கிடைக்கும் பொருள்களாகும். So happiness is for the people, those who are able to earn money and save money, invest money and get more money, much more than what they really need. To those who have honestly acquired an abundance of riches, the other two, virtue and pleasure, are things easy of acquisition. So Team Velu, as you all know, that results in real estate, it's win-win or no deal. Basically, we produce results. We have produced results for more than 300 investors and happy investors. And actually, this particular webinar has been sent to all my current clients and past clients only, and not to the general public. And later on, the potential investors and everybody will get a recording of this. So you are the privileged few, those who have been invited today for me to share this. And Sastha Realty Capital is started just about a couple of weeks ago by Team Velu, with myself as manager, to co-sponsor real estate deals, mainly multifamily, that are of value to the investors. Actually, can I call it as a co-sponsor? Maybe, maybe not. Right now, we are going as a fund of funds. So the entity, Sastha Realty Capital, will be one of the investors who will be investing more than $1 million, and we will have some privileges that will be passed on to the investors, and they will have an advantage investing through me instead of investing directly with Nanban. And with that said, there is a disclaimer for today. The information contained in this presentation is considered confidential, intended solely for the individuals to whom it is delivered. The circulation of this document or disclosure of its contents to other parties is expressly prohibited. The information is solely for the use of prospective investors to determine the level of interest in Sastha Realty and Sastha Investment Capital. While the information contained in this presentation has been compiled from sources we believe to be reliable, neither of the sponsors or their representatives make any representations or warranties as to the accuracy or completeness contained herein. All financial information and projections are provided for reference only and are based on assumptions relating to the general economy, market conditions, and other factors beyond our control. All references to acreage, square footage, and other measurements and approximations and must be independently verified. Prospective investors are encouraged to conduct their own independent due diligence investigation, review financial projections, and consult with their legal, tax, and other professional advisors before making an investment decision. Of course, you are welcome to set up a call with us so that we can also provide you with more clarification. And all right, now about myself, Raman Velu. I have become an independent business owner, becoming a realtor in 2013, and started my career as a realtor in 2014 with Keller Williams, and I was a top producing agent consistently, and I'm almost on the top 1 or 2. And then I became a broker 2 years back, and I now call myself as a real estate entrepreneur. And I'm a life coach trained by Tony Robbins, and I'm a real estate investment consultant. Basically, I help a lot of people get closer to their financial independence. And I have 15 plus years of real estate investment experience, I started investing here in Dallas in 2007. And I am passive in a lot of multifamily and also active in 6 multifamily deals. And probably I'm just approximating it at 2000 plus units. It could be close to 2500 as well. And I'm a co-sponsor of Industrial Warehousing Investment Fund. It is similar to what we are doing right now. It is a fund of funds. And Industrial Warehousing Investment, it is close to more than $5 million, which I have just completed raising right now. And the details are there at meetwithvelu.com. And I'm also privileged to have started a nonprofit called Sastha Tamil Foundation. And I'm an active director of Sastha Tamil Foundation nonprofit. And recently we have conducted a Thirukural competition and at a national level, and more than 500 children participated, and more than 100 volunteers were acting as judges, and more than 14,000 Thirukurals have been recited. So with that said, now I would like to invite Suresh Bachu he's from Houston and he knows more about this particular deal. And as you all know that this deal is provided by Nanban. Nanban is, the meaning is a friend. Nanban in Tamil is meaning is friend. And definitely they are very friendly to us and they are doing a lot of charity, and they're a beautiful team and a huge team of people. And we have quite a few others are also there on the call. And right now I would like to call Suresh to introduce himself and then take it from here.
Thank you, Velu. Such a wonderful being meeting with everyone right now. This is Suresh. I live in Katy, Houston, Texas. Been in the real estate capacity for the last 12 to 15 years, been single family and commercial. And of course, the last few years has been just doing a multifamily. I'm one of the founders of Orion RE Capital. And of course, we have over 200 plus 250 millions of overall portfolio being acquired over 100 millions in the last 12 to 18 months. And of course, we are working on the other current assignment property that in the northern Houston, which we are going to talk about the property as such, and also the realty fund that is being, as Velu mentioned, Nanban is all about like helping others and everything. Therefore, we believe in helping others, helping everyone become achieve their financial independence in everything. Not only that, giving back to the community and everything. Thank you, Olivia. Looking forward to
All right, thank you, Suresh. And I'm also working technically on the side. The investment is actually $50,000 as usual is the minimum investment here. And the holding period is 5 years. And you get a preferred return of 8%, which means first 8% will be given to you. Only after that, if something is left every year, it will be taken by the sponsors. And the sponsors take about 25%. And as a fund of funds, I get a little bit more. If you look at here at the bottom, I have highlighted it. More than 1 million, we get 21 to 24%. Whereas if you go directly, you may get about 20%. So there is a 4% difference, out of which I might take about 2.5 and pass on 1.5 to you. So you will get about 21.5, 21.6, something like that when we get the maximum. Of course, again, these are all conservative numbers. It can vary a little bit here and there. And other than that, we are also going to have bonus depreciation, which is like...
Well,
yeah.
Sorry to stop you in between. Are you
Sure.
sharing the screen?
We are not sharing the... Oh.
We cannot see the screen.
Oh, all right. So I thought I have been sharing it for so long, but thank you for that.
Yeah, there you go. We can see now.
So actually, here is the disclaimer. This is the first slide. And this is the Tirukural, if anybody... and all right, so thank you, Mani. Mani is the partner in Nanban, and he is one of the senior partners, Shakti, Mani, as well as GK. And also we have Savita with us today. And so bonus depreciation is going to give you a depreciation of about 60 to 70% of the money you have invested. That is going to create some kind of a tax benefit for you as well. And flexible exit options. This is very new to us. Usually when you invest in real estate, you cannot come out of it for 5 years. But here, if you have an opportunity to transfer it to another potential buyer, you may be able to do it. And of course, you will also have an opportunity to roll it over after you exit, so that you don't have to pay taxes on the capital gains and all that. And fund details, and basically it is I would call Suresh to give a high level overview of this slide. Go ahead, Suresh.
Yeah. Let me just briefly touch base about fund as well. Therefore, as you know, most of the times actually, like you see there are investment opportunities, asset based. Whenever there is asset is acquired, therefore you go and invest into that particular asset, and therefore thereby you are becoming a partner, limited partner in that particular asset. This is how we used to do the syndication, therefore syndication of several assets that we have done in the past. But going forward, we want to do as a part of a fund. What it happens is actually the part of the fund when you invest, you are getting a natural diversification of several assets. It could be different classes and everything like that. Therefore, that way, that is going to be another beneficial, and also like that, it also gives us the level ability to leverage and also work with the several institutional investors to acquire the properties at a very competitive pricing and everything. In fact, the property that we are acquiring as of today is because of our relationship with the seller that we are able to acquire at a very competitive price. That's what is actually is going to help. Therefore, irrespective of when we invest into the fund, you are going to be equal partner across all the assets that we are going to acquire throughout this year. The fund is going to be open for the year, and we may acquire another 2 to 3 properties during this year, and you will have that fund opportunity. Again, as Velu mentioned, is actually first 8% is going to be a preferred. That means every year. Again, there are a lot of questions actually, like, hey, whether it says 8 to 10%. Yes, yeah. Average expected annual returns is going to be 8 to 10%, of which 8% is going to be preferred. It means the first 8% of the cash flow from the assets every year is going to go to the investors directly. Anything excess will be distributed again at the 75% of those excess funds to the investor, 25% to the GPs. That's all. Again, at the exit, at the properties plan to exit after 4 or 5 years, or it could happen even sooner, depending as soon as that we get the projected returns of about 18 to 24%, we may exit sooner as well. As we exit the property, therefore we are going to pass on all the distributions back to the investor as well. Again, the fund class's intention actually is going to be, we will continue to focus on core and core plus multifamily. That's primarily the focus is going to be. Term is going to be 5 years, and 18 to 24 hours is the overall projected returns. And the distributions, as it said, every 8 to 10% paid out quarterly. That means every quarterly you will have the distribution. And bonus depreciation, as Velu mentioned, typically usually you will get about 60 to 70% of the depreciation in the year one alone. Again, subsequently also you will have a smaller depreciations, but the first year alone 60 to 70%. There's one thing I would like to highlight here is not everyone is going to be, again, depending on the personal situation, how it is going to be beneficial, that you may want to work with your CPA to understand how this the bonus depreciation is going to help you. And again, it's going to be rollover. Also, we have an option as after the fund is actually closed. If you want to roll over the tax-free funds into the subsequent one, is going to be as well happening. And also, if you have any assets that you have already planning to exit, and if you want to take advantage of 1031 as well, we have the option into that as
All right. Yeah,
well.
go ahead.
And of course, well, yeah, you want to.
No, go ahead. Go ahead. Continue.
I mean, the main intention of the like objective of our real always been actually is a preserving capital. Therefore, all we always look for properties in a nice neighborhood with a high population growth, job growth. That's why that is how we are going to make sure that even at a conservatively that we are going to produce the returns at the same time preserving the capital. That means it's basically consistently highly predictable returns of 18 to 24%. That's what our is going to be. Always we try to maximize the returns. Therefore, not just only by doing that, also leveraging efficient cash management options to maximize the returns. Therefore, again, it's going to be risk adjusted as well. Therefore, we are going to look for always forcing appreciation through different strategies that we have already been doing it. Therefore, even during the COVID, we always maintained high cash flows, and even in during the last 2020 during the COVID time, we achieved 85 to 90% of overall projected returns.
So why invest?
Again,
Why invest in Nanban Realty Fund? So, Suresh.
yeah, it's like again, one thing is like first we want. I mean, as we mentioned again, Nanban is all about not just only again. Everybody does the business in a different way, but the way of philosophy of the Nanban is actually giving back, right? And always we want to go and help the community. In fact, one of the ways that we can also do through the Nanban reality is apartments is something that is essential need of for every person, right? Therefore, during that time, actually, there could be a people, especially during the times, the 2020, the COVID situation, unprecedented times, a lot of people, unfortunately, didn't have the job or anything like that because of this, especially the small businesses were not functioning. Therefore, we were in some way working with so many other organizations, even having our own arm of foundation as well to stepping up to help the tenants and everything. Therefore, that's what we take pride in, what we do that. And also we have experienced team that, as I mentioned, we have over 100 millions of acquisitions in the last 18 months. We have great processes and everything. We are working with institutional sellers. In fact, for the previous property that we acquired in the last 4 months in the December, that was American Landmark. And in fact, they were so impressed with our processes, and also execution was flawless. Therefore, they also offered another properties as well. Therefore, down the line, even the current one, actually, it was exclusively offered to us because of all these relationships and everything. Again, investors are going to be our first priority, protection, everything. And we don't take any other waterfall or anything like that. We just want to 8% preferred. Also on top of it, actually, we are, as well you mentioned, actually, because you are coming through the fund of funds, we are giving almost 90%, 80, 90% returns back to the investors. That's what we believe in. Again, it's going to be risk adjusted because this fund you are investing into a fund, they're also going to give you the diversification, not just only within the multifamily, the different classes. Also, we continue to look for opportunities outside of the multifamily as well. Therefore, as we move along, our philosophy is going to be 85%. Of course, continue to be the multifamily, also 50%, 15%. We will also be looking for opportunities in hotels, senior living, student housing, and wherever otherwise is the diversification as well.
Beautiful. So basically, they have a beautiful team, and the scale of operation is so big. So their purchasing power is pretty strong. And not only that, they have so many other advantages, and continuously they are going to come up with projects, and they are able to encourage people like us who are able to support the investors. So it is going to be a win-win for the investors and deal sponsors like us, co-sponsors, as well as for them. So as a community, we are all going to grow together. Now, The next one is about, basically they are going to be 75% is going to be coming to the investors after the 8% preferred return, and then Nanban Realty will take 25%. And now we are acquiring the Nanban Laurelwood LLC is going to be acquiring this first property, and there will be 2 more properties or 3 more properties which will be purchased as a part of this fund actually. Yeah, this is a A-class multifamily. Usually, I am used to C-class, 1980 built, 78, 80, 82, something like that. And this one is, 2008 built. That means such a new units, and 324 units. And they've already just recently spent about $1.1 million for the capex. And right now we have provided, our Nanban has provided $3 million capex budget as well. And the median income around that area is 90K to 200K. And even during COVID, it was not affected that much. And top schools in the surrounding area, and it is a Class A, and average square foot is 883, and it is about $250 less than the market rent. So we have a good upside to be able to come up with a good profit sooner. And the purchase price is $48 million. And the interest rate, of course, as you all know, it is low. And we are able to get the 3.5% loan. And so we are going for a 75% loan and raising $15 million for the $48 million. And entry cap rate is 4.9, and the exit cap rate is 0.5 more. That means we are assuming as if, what if we cannot sell it at this best price possible? So at like a 5.4 or something we have assumed. So what that means is, if you are able to sell it at the same cap rate, our profit will become more. And the capex budget, as I said, is $3 million we will be spending to be able to raise the rent about 250, or probably we might have a lot more upside as well. Again, back to you, Suresh.
Yeah, as Velu mentioned, it's actually a Class A asset. Especially if you are from Houston area, Woodlands area is actually one of the premier location. Therefore, it's been growing very well. Not just only Houston is no longer just oil and gas, because medical and everything has been growing verticals as well. And the schools are very good schools, and the location is actually ideally located. And it's actually one of the fastest growing areas. And obviously, it's a democracy. Actually, it's very good demography, and within everything, and there's a lot of employment, and the townships and everything is actually there. As Velu mentioned, it's actually the median income is very healthy. Typically, is about 60 upwards is actually very good, but here is actually 90 to 200,000. In fact, we just recently completed the due diligence of this property by walking into each and every unit. It's so healthy actually. Like typically, when you go for any apartment rental, they expect you to have at least 2.5 times of the rent as your income. Here, this property right now we are seeing 4.5, close to almost 4.7 is the income to income ratio, which is a very healthy. That is the reason the property is holding up very well.
Okay. So these are the pictures of the property, and you can see that how good the property is. It's a beautiful property, and definitely, Houston is also growing, all the Texas, and our money is going to be backed up by this beautiful property, which is really, really good. And one bedroom units are 191, 2 bedrooms 121, and 3 beds 12. It's a pretty good combination of the units, and so and this is the floor plan. And again, Suresh already mentioned about the location, right? So like if you really look at it, just opposite to the apartment, you can see that all the stores like Target and all other stores are pretty close. And also I was the Starbucks is there, right there, so that means all of you know that Starbucks, McDonald's, Walmart, if they go there, what does it mean? So it's a beautiful location. And Suresh, would you like to cover this one, Springwoods?
Yeah, actually, just to add that one point, actually, during the due diligence, we were walking into every unit, obviously. Therefore, we were talking to several tenants, and it was so overwhelming, actually, that listen to so many tenants. They were so happy about this location because the fact that actually right across in the walking distance, you have all the all these places for everything, including restaurants and everything, and the hospitals, elementary, everything. Therefore, that's such a really nice thing. And coming back to, there is a Springwood Village. Actually, it's one of the premier villages. Actually, with are catered with all the employments and everything. And again, city place is actually 60 years development that includes 4 million square foot of retail and a lot of activities going on are in that area. And of course, ExxonMobil is not far from this location. And Exxon has actually built a complete huge location, uh, centralized location in that area as well. Also, recently, HP also announced that actually they're moving back their campus back into these woodlands. Therefore, it's going to be a lot of employment is actually going to be in that area. And again, in the woodlands is actually, as you notice, actually here is actually number 2, the best city to live in America because of the overall growth, job growth, and everything. And the median income, as you notice, actually 118,000 is actually very healthy. This one. And again, the Woodlands Mall is actually centrally located about few miles south from the property as well. And since 1994, the positive overall population growth is actually phenomenal. And based on our deep market analysis and research, it continued to outpace the overall Houston market, the job growth as well as population growth for the next 8 to 10 years. As I was mentioning, actually, it's in the midst of so much employment and everything. It's continued to grow in all the sectors. As you notice, actually, in this particular area, just in the medical and healthcare itself is about 26 to 30%. Apart from the chemical facilities and everything, continue to all the oil and gas companies also going to be continue to diversification into the chemical, which is also going to be a lot more jobs in that area. Yeah, it's more highlights about that area.
Houston is all about, no more it is oil and gas, right? So now we are coming to the rental comms. So it is a lot more information given here, but the point here is, if you look at the occupancy, it is all about 92, 93. That is shows very healthy, right? So we are going to get a pretty good cash flow. And other than that, as we said, it is $250 less than the market rent. So it will be pretty easy to be able to raise the rent soon to add value. And this is the pro forma business plan. And if you look at the last line, cash flow before tax, in the first year, it is about $1 million, and then it keeps on going. And we expect to achieve about 100% return in about less than 5 years. At any point of time, so if you look at the business plan, it's a premium and most sought after property within the submarket of 5-mile radius. And we already said that 1.1 million capex has been spent and 3 million is planned. And so where are they going to be spent? Right, granite countertops, backsplash, stainless steel appliances, technology package, modern bathroom with tiled shower walls, vanity mirrors, crown moldings, estimate of 8K to 10K per unit. So that is going to add a lot of value to the units. So that will provide a lot more upside for the next buyer as well, which is important for us to be able to sell. Expected rent is about 200 to 250, but whereas for the underwriting purposes, I think we have taken only about 175. So everywhere possible, it was underwritten a little conservatively, so that if something unexpected happens, we can still be able to handle that and then still provide the expected return. Every person who invests in well-selected real estate in a growing section of a prosperous community adopts the surest and safest method of becoming independent. For real estate is the real estate is the basis of wealth. Theodore Roosevelt, US president. Actually, what I was told, like if you take all the companies put together and all the income put together, the appreciation of the real estate in the whole world is much more multiple number of times. So we are taking advantage of that basically, and you are in the right place. And are you ready to reserve your spot? Minimum is $50,000. And all you need to do is, like, I will copy this and put it into, 1 second. I think I already have one. I will copy that. 1 second. So it is a new portal which I have signed up, and you are going to have a very good experience with that portal. All the documents are going to be there in the portal, and you will be able to see everything. It is going to be pretty seamless, and everything is going to be integrated. And that is Syndicator Pro is the software which I will be using. And right now I just given you guys the link for reserving your spot. That will ask you to create a user ID into the portal. And after that, once we approve, then you will be able to access the PPM and other things as well. And in a little while, I'm going to actually right now, I will see whether I can unmute all of you, so that if you have any questions, you should be able to ask. Can you raise your hand so that I can unmute you so that you can ask your question? And in the meantime, let me cover the next 3 slides as well. All right, somebody has a question. Okay, Mani Sundar and Vel Dandapani. Okay, let me unmute you guys 1 second. Okay, Mani, go ahead.
Velu and team, thank you for the information. One question I wanted to clarify, the annual return, you're saying 8%, but average annual return, you're saying 18 to 24. So it's kind of misleading for me. Could one explain?
Yeah. So usually multifamily, how it operates is, when we say a total of, say, in my communication, I'm saying 108%. So 108% is coming to 21.6%. Let's say you are getting about 8 to 10% every year. Let's say 8%. 5 years, you would have received 40%, right? So the rest of the 68% you will get when we exit. So if you put $100,000, you'll get $8,000 every year. That is given quarterly. That means every quarter you'll get about $2,000. And then finally, when we exit, we close the LLC, and then at that time, the 100,000 may become 168 or more. So that is how it works. Hope that helps.
Well, do you want to go back to the slide where you have the table with the detail that we can talk about that by using that example?
Oh, okay. I think I don't have that slide. I think I maybe.
Okay, that's fine. Yeah, sure. I can answer actually. Like money is actually, as you say, like this is a cash flowing property that we acquire. That means from the operations, you do get the eight, as well you said, about 8 to 10%. That is from the operations. That means 5 years, assuming it is the whole period, we are talking about 8 to 10%, anywhere between 40 to 45%, you will get from the cash flow of those operations. And then at the exit from the capital gain, that is, you are going to get additional 45 to 50%. Thereby, your total average annualized returns is inclusive of the two components. Basically, one is the cash flow operations, and also from the exit at this one is going to be 18 to 24%. Is it clear?
Got it. Okay. Makes sense now. Thank you.
All right. Once Whale asks a question, then I will answer all the questions in the Q&A. Go ahead, Whale.
Thanks, Velu and Suresh. I have a couple of questions. The first question is, when we say a fund, for that matter, a real estate fund, right? The thing that comes to my mind is we create a fund and multiple properties would be bought or acquired with that fund. The one that you showed, Laurelwood, is one property. I think you guys are under contract. So is that is my understanding correct? You're going to invest in multiple properties, and if so, have you identified other properties in pipeline?
Yes, yeah. Let me answer. You are right. The first property that we are acquiring under this property is the Laurelwood. We do have several other things in the pipeline as well. But just for this one, actually, is people will continue to, we will always continue to accept the subscriptions. But as we get the funds for the required to acquire this property, that we are going to stop accepting the funds. But the subscriptions will continue to flow in. But the moment we have other property that we are under the contract, then we are going to start accepting the funds, those who are already submitted the subscription. What it will give us actually is, it will give us an ability to size the deal the next month, also have the ability that because we already have the funds, already everything is lined up, that way we can go and negotiate better with the seller as well.
Thank you, Suresh.
Okay, Suresh, a follow-up question. So let's say if I invest, right, and whoever invest within that range, whatever you expected to raise for the first property, so all will be part of the first property, right? And when you acquire another property, whoever invest after that, I mean, that's going to be fresh investment, or the people going to invest additional money. Is that so? My question is, my money is tied to this one property. Is that correct?
That's correct, because everyone is investing into a fund. Thereby, as we acquire more properties, you are going to be a co-owner across all the properties as well. That's correct.
Yeah. So thank you. And I'm going to answer the questions one by one, or call others to answer as appropriate. And Peri, will you be talking about year-to-year projected returns? Basically, I just showed the one slide, and we will be able to, you will have access to those slides as well. And if you have any questions, we will be able to share more parts of the underwriting, and that is one. And the next question is, if the property is located at an excellent location and the property is in excellent shape, why is the current rental $250 below the market price? Suresh, do you have an answer for that?
Yes, yeah. This property, as you said, actually it's an excellent location, excellent condition. This was built in 2008, as you noticed, but in the 2008, it was not a standard that to have a stainless steel appliances or a quartz or a granite countertops and backsplash and those stuff. It's kind of, though the property is in great condition, the amenities and the interior features were not up to the current standard today. The difference of the one you're saying like a 250 even higher is because of the newer properties nearby right now is actually either even the firm, for example, in the rental comparison I have included 2002, the property was 2002, but now it's been upgraded. That's why they're able to achieve the higher rents. Therefore, as Velu shared, $3 million is almost $8,000 to $10,000 that we have planned is to improve every interior of every unit, thereby achieving that conservatively $175 to $200.
Okay, good, thank you. And can you go over the organization structure? How is Sastha and Nanban Realty related? So basically, we are not related, and they are allowing us, say, when there is a fund of funds, right? So when they are raising, say, $30 million, $40 million, many times they may not be able to handle all the $50,000 investors, or they also encourage people, those who are able to syndicate and bring them over in bulk, right? So I am the Sastha investment capital is going as an entity to them, and they are able to encourage that by giving us 4% extra returns, which part of it is shared with you guys. So fund of funds means it is basically I will be the one who will be servicing you. So that is advantage for them. And other than that, there are a lot of people, those who are there in my client network, and those who have been doing business with me, and it will be more convenient for them to do through me as well. So there is an LLC which is created. It is a sub LLC. So that is the structure. Is there anything else, Mani or Suresh, you would like to say about that?
Yeah, you rightly said, actually, therefore you are coming in as a fund, therefore you are all going to be investing into that LLC, but you're also getting higher returns as well because of that.
So next question is, will Sastha Realty be a GP to receive 25%? No, the 25% I will not be a part of. So they are not taking me as a part of a GP unless I raise $5 million or more. So basically, right now it is whatever small percentage I'm going to take within my LLC as a fee. That is what I will be doing, and still you will be getting better than what you will normally get. So that's how it is, and you will also get certain other benefits with respect to the other funds they have, the stock trading and the hedge fund and all that as well. And the next question is, so stay back for the last 3 slides, and we are going to have an announcement as well about the hedge fund. And Savita will talk a little bit about what the hedge fund is doing and what are the returns, because if you look at my email, it talks about 40% return. That is not expected from this real estate. And I have very limited spots, and we will talk about that. And the next one is following up on Mani's question, what returns during the 5-year life of fund can we expect each year? So each year it is 8 to 10%. And when we exit, the total return will be more than 100%. What I am saying is 108. Again, that is a conservative projection, depending on, of course, nothing, nobody can guarantee anything, as you all know. And the next question is, are you planning to increase the rent after acquiring? And will the rent still be under the market rate after the increase? Yes, of course. After acquiring, you have to spend that $3 million. And while spending the $3 million, probably if you complete the upgrades in, say, 10 units, when can you upgrade? Only after they vacate. And then they will be ready for increasing in rent. So it may keep on going like that sequentially, and it may take about a year or two to implement that $250 across the board for all the units. And when do we plan to close? It is actually, the closing date is March 15th. But in fact, Nanban is such a big organization. They, as far as I understand, they have funds. They are not completely dependent on this. And once, as and when the fund comes, they will be able to use it. And they are not, but however it is, they will still close during March 15th. And because it is a fund, we will be continuously collecting the funds as we are going to do the second unit or second multifamily, third multifamily acquisitions as well. So then how much will be the property management fee, asset management fees? Suresh, do you have that information?
Yeah, the property management fee is going to be typically 3%. That's how we always use the United Apartments Group. They manage over 30,000 units across multiple states. They're the ones, and asset management fee is a standard 2%.
Oh, yeah, okay. And when does the clock start for the investors after investing?
It's going to be from April 1st. It's going to be that one. That means thereafter, every quarter, you will continue to receive the returns.
Okay, so you all have time until say March 28th or so to fund, and so that I will be able to send it before the April 1st. And what is the reason that the rent is $250 lower than comparable? We have already addressed that, because the comparable properties have upgraded and this one is not. And once we upgrade it, we will be able to increase the rent. And then is it a non-recourse or recourse loan for this deal? Usually these are all non-recourse loan. And as far as I know, only if you go for a very smaller amount, right, less than $1 million and all that, then they will ask for all the personal guarantee and all that. Even in this loan, we all give a guarantee, but again, it is still a non-recourse loan. So it is tied completely to the business or the business, multifamily business, basically. How often do you communicate to investors? Right now, quarterly report is what is promised. So you will get a quarterly report. Other than that, Suresh, are you guys planning to send any other monthly updates or anything?
Typically, during the stabilization period, about 4 to 6 months, there will be a monthly update as well. But once the property is stabilized and gets into normal course of action, that's going to be a quarterly update along with the quarterly distribution, everything. Again, all the financials and everything will be posted onto the portal. That way you'll have access to the how we are performing and everything.
Awesome. So we have completed all the questions asked and no more hands raised. And right now, let me share the screen and talk to you all about the next slide. Next slide is about, okay, now I am going to invite Savita to talk a little bit about the hedge fund and how, what kind of returns are people are seeing and all that. Then I will also share my experience as well. Savita, please introduce yourself.
Thank you so much, Velu. What an honor and privilege to be part of this meetup. And kudos to you for all the great work you've been doing around this community and for Tamil. It's really awesome article. And with that being said, I am Savita Doraiswamy. I live around in the Frisco area in Dallas, and I'm the Chief Investment Relation Officer for Nandan Investments. So any hedge fund related questions or anything, I'm the go-to person for Nandan to talk about it. So just introducing what we do as part of Nanban Investments. Nanban Investments is a private equity hedge fund. We have about 4 funds until now. And what we do is we basically collect the money from 99 people. That's how the hedge fund works. Our fund can include about 99 people, and using the money we receive from the 99 people, 99 investors or Nanbans, whom we call, we invest and create or generate superior wealth for our Nanbans. So you all know how this Nanban investments came up, most of them. For those who do not know, we apply the strategies cognized by GK. GK, who is our CEO, he is the founder and the mastermind and the backbone of all these strategies. So we have about GK's level 1 through level 5 strategies. And if you're aware, our non-profit wing of Nanban Foundation is where we started. I would always like to say this: most of the businesses, they start the business wing and then go to the foundation wing. But in Nanban, it's completely the opposite. We started the foundation wing and then we were kind of compelled to start the business wing due to demand. So our foundation wing really goes ahead and educates level 1 and level 2 strategies for free, no strings attached, free educational webinar, high class educational webinar, which we provide to our common Nanbans, anyone can take it, whether with high net worth, low net worth, medium net worth, we cater to everyone. They can learn the strategies, and on their own, they can produce about 18 to 24%. That is about a level 1 and level 2 strategies cognized by GK. Okay, what is the difference between this and that, right? Our private equity hedge fund does not just deploy level 1, level 2 strategies, but we use level 1 through level 5. So level 3, 4, and 5 are really copyrighted for Nanban investments, and they are just used in Nanban investments to generate superior returns. So if you really look at it, our hedge fund, we basically invest in market indexes. So that is where our strength lies. How does that lie as a strength? Because it cognizes of so many companies like S&P 500, SPY, which is the ticker ETF when it comes to the S&P 500 market. If you look at this slide here, that itself says it consists of 27 trillion, 500 companies coming together, and that is where we invest. So if you look at the market size of residential US real estate, it's 34 trillion, and commercial US real estate is 16 trillion, and S&P 500 sits right in between with 27 trillion. And this is where we invest. This is where we have the edge. So it's highly safe. When I say highly safe, are there risks? There are definitely risks, but most of the risks are mitigated because we invest in S&P 500. Let's go to the next slide. Okay, and let's talk about the returns. All of us are here are investors, and this is the most important slide for all of us because we really want to know how much we can make. What is it in it for us, right? So I just would like to add, there is a small correction with this. This returns still hold good for two of our funds, right? We have, I was mentioning in the beginning, we have 4 funds. 2 funds are closed-ended funds, and the 2 are open-ended funds. The closed-ended funds means what? They just open for about a year. They have a definite time period. And we started one in June of 2020 and September of 2020. And those are the only 2 closed-end funds. Going forward, we'll all be having only open-ended funds. So let's not talk about closed-end funds because we're not going to have them anymore. So let's concentrate on the open-ended funds. The rate of returns you're seeing here is really for the closed-ended funds, but I'll go ahead and talk to you about the rate of returns for open-ended. It's pretty simple, and I'm sure we all can catch up. So open-ended funds, what do they really mean? Open-ended funds do not have a definite time period. It's not closed after a year. It can go on for a longer duration. And we have modeled like the real estate, every quarter we will be distributing our cash flow. So our strategies, what we deploy in our private equity hedge fund, there are cash flows. Every quarter we generate cash flow. The analogy is so similar to a real estate. Like you have a multi-unit property here. Here we have multi-units, that's nothing but SPY, lots of SPY. And here multi-units generate rent as cash flow. Here also we have premiums which we receive in options trading, which is our cash flow. So it's such a beautiful analogy with respect to real estate. And every quarter, whatever cash flow we generate, we will be distributing that to our investors. Okay, how will we be distributing is what I'm going to talk about right now. And I'll talk about the annualized returns, and then all you have to do is divide that by 4, and that's what you would be receiving at the end of the year in total. So the fiduciary duty at its best is observed in Nanban investments. What do I mean by fiduciary duty at its best is the first 20% is distributed to our LPs, to our investors, to our Nanbans. So we as Nanban investments start making money only after we give you 20%. So, I don't think anywhere in the market we can beat that, and that is what blew my mind away when I first heard about this. So the first 20% goes to our Nanbans. And after that, whatever we make is split 60-40. When I say 60-40, 60 to general partners and 40 to limited partners. So 60 will go to Nanban GPs, and then this 40 will go to all of you all. So that is how it will be split. So whoever are investing, within this April, I guess Velu will also be coming in within this April, we are offering them a Diamonds Club status, right? So what happens is the first year you will be capped, and from the second year onwards, the profits will not be capped. And I'm sure Ram Velu will talk about more on that. From the Nanban side, that is what I wanted to cover. So if you look at the annualized returns, it will be in this proportion, right? So after the 20%, whatever we make will be split 60-40. So if we make 100%, I would always like to emphasize on the word if we make, because as per SEC guidelines and compliance, we really cannot say we will make that. But with GK's expertise and experience he's been using for the 20 years, we are very confident of generating superior wealth for our investors. So if we make 100%, you will be getting 58% as an investor, and we will be taking 42%. So that is how the math will work from a annualized returns perspective. And if you make more than 100%, yes, you get to share that as well. So that is what the Diamond Club really means. When you go to Diamond Club, after the first year, you're not capped on the higher side. So after 20%, which is given to you, how much ever we make is split 60-40. So that is all about the Diamond Club. But if you look at this Platinum Club, do you see this? Because after that, after this batch of this open-ended fund, we just have very few. I think it's all subscribed, and yes, definitely Velu has a spot there. Whoever comes after that with any of our new funds, we are capping it at 40%. No matter what, how much ever we make, we are capping it at 40%. So why the best hedge fund in the market in the Wall Street gives 40%? So we are just mirroring that. We're just giving the 40% return after that. It is mainly to take care of our non-bonds. It is actually, we feel that whoever have invested with us in this first year have invested with a lot of trust and faith, and we really want to honor that from non-bond. That is the only reason why we want to open up and share our profits wholeheartedly with the non-bonds who came to us in the first year. That is the reason we are doing that. So we'll go to the last slide. This is our investment thesis. Everybody, when it comes to a hedge fund, it's very important for all of our non-bonds who are investors to understand what our investment thesis is for creation of wealth. So the downside protection, this is like a no-brainer with our investment thesis, because maximum drawdown at any point of time you'll have on the hedge fund is less than or equal to 2%. So what does this mean? Say for example, we've invested 100K, like how the market has been behaving in the last 3-4 days. Many of us, that the portfolio would have come down drastically by 20 or 25%, right? Tesla shares, all the tech shares, so many shares have come down drastically. But in our portfolio, if you really see, the maximum drawdown is only 2%. How and why? It is all the strategies GK has cognized, the level 3, level 4, level 5, which is IP, which is our intellectual property, copyrighted with Nanban Investments. But those strategies are designed in such a way that it will protect our asset. And that is most important. And when you protect your asset, and then it's very easy to grow after that. And compounding growth, right? Because you're making cash flow regularly, the growth is also compounding. That is our investment thesis. And look at this is the best thing: diversification and liquidity. Like for example, say all your stocks are in Tesla, all your stocks are in Amazon. Do they have the tendency to go to zero? Yes. It may not be like, you cannot say Amazon will go to zero, but do they have that possibility? Yes, they do have a possibility. But if you think about S&P 500, it's a combination of 500 different companies. And in order to make it to the S&P 500, they have to constantly prove themselves to make it to S&P 500. So you're investing in something which will most of the time be performing at its best. And somebody is really monitoring and making sure that the 500 companies are doing the best. And yes, can it go to zero? Maybe yes, if a meteor hits the earth. And at that case, I don't think we'll all be here to talk about these investments as well, right? So that's the best part about S&P 500. And we always beat the market, because the strategies what we have is beautiful, that it always beats the market. No, if you've attended one or few of you, if you've attended your L1, L2 sessions, or if you have not attended, please look out for them in nanbanfoundation.org. We have go to our website and go to our education tab and sign up for the upcoming sessions. Then you will really know what we mean by this investment thesis. You'll have a better understanding of them. And the next one is the most beautiful thing. It's mechanical, no timing the market, no predictions, no charts, no indicators. You may think, is it even possible? Yes, it is possible. And I'm a living proof for that. I practice it day in and day out. Whether the market goes down, market goes up, we always make cash 100% of the time. That is the beauty about it. And it removes the emotions behind. Most of the time, whenever we are doing any trading in the stock exchange or anything, it's emotions which take us over. Whether to sell, whether not to sell. We're very emotional. But GK strategies just takes out that emotions. It's just mechanical, and we just have to follow those simple steps, and you're done. That is the beauty about our investment thesis. And the next, cash flow, 100% of the time. The asset value may go up or go down, but we always focus on cash flow. And the beauty about this is, when it is highly volatile, we go very high on cash flow. So this is our investment thesis. I would highly recommend, as I was talking in the middle, to understand an investment thesis, to have a practical know-how of how this works. I recommend you all attend our next upcoming webinars, L1 and L2 webinars, which is offered free from our Nanban Foundation, no strings attached, and backed up by a huge volunteer base. We have hundreds of volunteers, not just here, even in India, who help our new investors tirelessly to bring them up to speed. Please go ahead and sign up and avail those services. Financial freedom, nobody really teaches us, but here, Nanban Foundation does it, and it will be a great way to understand our investment thesis. So I guess, Velu, that is all I have to talk about our hedge fund. So I'm open to taking any questions.
Yeah, let me add a little bit, Savita. Thank you so much. Savita is a customer facing person, and she's the team is so good, the culture of the organization is so good, and it is so beautiful to work with them. And she has been supporting me as well. And it's one of the things I wanted to tell you guys is, they were already, it was mind blowing when I am saying that for the last 12 years, I have raised about $600,000 through Sastha Tamil Foundation to do the charity. These guys have done $15 million in the first year for farmers related project in India just about a couple of months ago. And they have a huge number of volunteers working, and someone has resigned the high paying job to be the leading that particular venture and all that. So it is so beautiful. And to also tell you how actually I have been referred to Nanban several times in the last year, but I did not believe that it is possible. And recently, and when Arun Kumar from MTS, the past president, interviewed GK, and when he said, when my friend Murli has raised about $5 million, then I attended that level 1 and level 2 strategy sessions. And now I'm trading those without any emotions. And that is really yielding result. And I've also been able to validate their success over the past so many years. So that gave me the confidence to get into this game. And I'm investing my $100,000 as well. And here, what I found out was, what they are doing is, they are doing like, if you go for bowling for the children, we put a guard rail type of thing, right? The ball, if it goes on the side, instead of falling down, it hits the rail and then come back. That is how they are able to channel, and they are always able to make money. And so I'm pretty confident that it is a win-win for everybody. And my requirement, my fund is the only one which is open right now, except that there may be another possibility to come through the back door or whatever it is. And so this one, I have already $900,000 of commitment right now, and I only need $100,000. And but whoever is able to come through me with the $50,000, they will be able to enjoy the grandfather benefits of of getting the returns, increased returns during the next years as well. Please contact me or send me an email so that I will be able to talk to you one-on-one and then take you from there. And I also would like to say that more than 5,000 or 10,000 people got benefited out of their free training, and all of them are making more than, most of them are 20% or more. And basically, some of the people, those who are right now attending this webinar, they have attended these sessions at least a couple of times, and they are trading as well. And they told me that they are pretty happy with that. So with that said, so I have only a few spots open, and it has to be funded before March 15th, and it is minimum $50,000. If you can do that, there is going to be a small fees involved from my side, but still it is going to be more than 50% return for you. And at that time, you will be definitely be happy that as the other doors have closed right now. And with that said, if there are any questions, please raise your hand. And in the meantime, I also see that there are quite a few questions in the chat. We will address that as well. So anybody who has a question, please raise your hand, and we will go from there. And actually, I have posted the link for you to, if you're interested, where you need to go and sign up to reserve your spot. I have given, or otherwise you can just send me an email to velu@teamvelu.com. And there is a question I'm going to read. So you can comment on the chat box. What do you think about this webinar, and what is good about it? What other questions you have? In the meantime, let me read the other questions. Is exit always after 5 years? Does Orion Nanban decides to exit early, say 3 years, instead of normal 5-year holding, when if the good buyer with the returns of 100%? Yes, that is true. That is so true. And if something happens by 3 years to make 100% profit, many times we may be able to exit earlier. And will you be investing in Nanban real estate fund or their hedge fund, or in both? So actually, they are two separate. So I have started two organizations. One is called Sastha Investment Capital, that is for the hedge fund, and Sastha Realty Capital is for the real estate. So it is going to be two separate things, and you can make a decision, and you can talk to me separately in case if you'd like to have some distinctions or split the money here on both sides. Currently, the property values are higher because of lower interest rates. When the interest rate goes up, what happens? What happens when the value goes down, or if you can't sell the property for profit? Real estate, of course, that is why we have provided, that's called conservative underwriting, right? So we have made some provisions. So even though we are buying at 5.9% cap rate, we provide a 6.4. And even though we can make an increase of rent by 250, we say 175 like that. So there is a lot of cushion in there. And so we should be able to still hit the target, even if the market is not very favorable during that time when we sell. And if the market is really worse, say for example, the 5th year hits and something like COVID happens, probably we may have to wait for a year or two. Did the recent winter storm in Texas cause any significant damage to the property? Suresh, do you know anything about that?
Yeah, let me speak about, I know I was expecting people to, in fact, that's one of the things actually as part of the due diligence, we wanted to walk through each and every unit. The good thing actually, since it is a newer property, every unit had a sprinkler. Therefore, they turned off all the sprinklers and everything ahead of the time. Therefore, that's why the damage was not major. There were only few units that had a pipe burst and everything. But again, right now, as we speak, they're already fixing everything. And now, in fact, by Monday, everything will be back. All the sprinklers, everything is going to be back operational. Therefore, the damage was there, but it's a very minimal, and they're going to be addressing even before we acquire the property.
Okay, thank you, Suresh. And there is another question for you as well. I thought Suresh mentioned that the investors will start seeing returns every quarter after April 2021. Isn't the first distribution after 6 months? So I think the question is, first 3 months, is there a distribution, or the first distribution will come only after 6 months? Will it include for all the 6 months, or it's only for 3 months?
It's going to be after the 3 months itself. Therefore, that's how we are going to operational efficiency that we are bringing. Even for the property that we acquired in December, we are going to be making a distribution right after 3+ months. Therefore, that is how it is going to be.
Awesome. And what is the holding period for the hedge fund? Actually, for the first year, there is going to be definitely this first year is a holding period, and quarterly returns will be reinvested. And after that, you will be able to take quarterly returns. And we expect you to be there for at least 2 years. But sometimes you may have an opportunity to exit even after 1 year. But once you start seeing the results, probably, I don't know how many people will exit, so that we have to wait and see. And that is the last question. And let me.
There is one more question, Will, about do you allow investments to hedge fund from IRA? Yes, we do have, we do allow from IRA through self-directed IRA. We have a fund specifically for IRA, and it's already up and running.
Right. Yeah. I'll be able to take money from IRA as well, self-directed IRA as well.
But
and yeah, go.
It's only for the IRA fund what we have, but the perpetual fund is completely the non-IRA. Just
Perpetual fund, you don't accept the.
No, we don't accept the IRA money.
Okay. All right. Is it okay if I accept it within my LLC? No.
I think anytime there is an IRA component involved, then it cannot make it to the perpetual,
Okay.
because the investment thesis is like that. Because we have multiple funds, we have to have an investment thesis on its own, and that's how we differentiated. And it's called internal doctrine from a SEC point, and that's how we differentiate.
Okay. Awesome. Are there any other questions which I'm missing? Yeah. So yeah, that is the last question you answered.
Hey, Velu.
Yeah, go ahead, Mani.
I put the question in the Q&A. Not sure whether you're seeing it. Question is probably for Savita. How the Nanban Realty and the Nanban hedge fund, are they related or different? If it's different, how are they different?
They're completely different in the sense Nanban Enterprise is the parent, and Nanban Realty and Nanban Investments are separate business units, lines of business under Nanban Enterprise. However, there's one relation which is available in both. When I say relation, say for example, if folks invest 100K or more in realty, then they are automatically honored with diamond status for investors. Because as I was saying, whoever invests after this April, they will not be given diamond status in London investments. So if they invest in realty 100K by enterprise wide, they will be honored as diamond status in investment. So what does that mean? Can they come and invest the same 100K in Nanban investments? May not be, because Nanban investments right now, the minimum is 5 million to get into the hedge fund. So at that point, whatever the minimum is, if they invest that, they will get the diamond status. So that is the only relationship. But from a line of business perspective, they're two different.
Got it. Thank you. Then if I'm interested to put or invest in Nanban hedge funds, like you said, the minimum is 5 million. So anything below, I don't have a choice. So the only way is probably through this Realty then.
Yes, one way is realty if you want to invest directly. The other way is like Velu was explaining. He has like a spot in our upcoming fund, which is in our upcoming quarter. So through him, you can invest through us.
Yeah. So people, those who are able to come before March 15, then they will have a grandfather class, or people those who are going to come after that next year, then probably I will be only be also capping it at 40%. So there is an advantage for you guys to enter, and this is going to be the last opportunity, it looks like. And I was first thinking of just allowing that only for the people, those who come for investing for my first $1 million. But now I said that whoever is able to attend today and able to fund it before March 15th, a minimum of 50,000, they will have that opportunity as well. So that is the almost the end of, we are almost coming to the end, and it's about 1 hour and 15 minutes. And I have almost unmuted everybody. And if there are any last moment comments, the comments can be positive as well. And if you like something, you can say that. And if you still have any other thoughts, questions, please go ahead. And I would like to thank Savita, Mani, as well as Suresh, everyone in the Nanman's team for showing up here with a lot of energy and good vibes. And that is what we are getting into when we are partnering with Nanman. Thank you all very much. And I'll wait for a few more minutes for anybody to just unmute yourself and then talk.
I don't have anything else. Thanks to you, Velu, and the Nanman team.
Thank you, Mani. Appreciate it. So if there are no other questions, no other comments, and this will be recorded, and it will be shared with all of you. And once you sign up, you will also have access to the presentation deck, and you are welcome to schedule a meeting with me, calendly.com/teamvelu, and we will take it from there. Thank you all very much. I really appreciate. Nandri, vanakkam. Ira vanakkangal.
Thank you all.
Thank you all. Thank you, Velu. Yeah.